Good afternoon, everybody. So it is the third week of August, August 17th. The market opens tomorrow, August 18th. So we are going to do our analysis. Last week we had some pretty volatile movement. We had a very news-heavy week. I believe this upcoming week is not very news-heavy, so it'll be interesting to see what goes on. I think that last week's news will just continue to affect the markets into this upcoming week. But before we get too deep into anything, let's go ahead and pray. Dear Lord, thank you so much for this absolutely beautiful day, Lord, these opportunities, God, to come into the markets and come into the YouTube environment and come into the Discord environment, Lord, and ultimately do your will and build your kingdom and bring your kingdom here on earth as it is in heaven, Lord. Lord, I just ask that in this analysis that we are going to do today, God, I just invite you, I invite the Holy Spirit to rest on me, Lord, and to rest on us who are doing analysis, God, that you may be here and present with us to give us wisdom, to open our eyes to see potential moves in the upcoming market, to give us sense that we may make decisions that we can profit off, Lord. And just ask that even through maybe possible losses, Lord, that you would still be with us, God, and just ultimately guide us, Lord. You are so powerful. You are so awesome, God. Your love is so eternal. It's everlasting to everlasting. And we praise your name. And we say this in Jesus' name. Amen. Okay. Okay, I had to get my cat. Hello, Khaleesi. Okay, so last week was very, very well. Okay, so for the index, obviously you can see the news here. We have PPI, we had CPI, core retail sales is very volatile last week. It wasn't necessarily volatile in that it went price like swung back and forth too much. Price actually was bullish, I think, just about every single day of the week, which is pretty crazy. So I think that price action will continue into this week as we have a pretty calm week, and I say that with like air quotes coming up, but I think, like I said, just the ripple effect of our news last week will continue to move the markets in this upcoming week. So let's just take a peek at the news. Ooh, so we actually have a FOMC member speaking on Monday, and we have Fed. Oh, you know what? I'm tripping. This is not calm. This is not calm at all. We have Jackson Hole Symposium. Oh no. Okay, let's just talk about that for a second. First off, the data that we see here on CPI and PPI, these are all pointing to great chances that we are going to get that rate cut in September. And then we had retail sales and we had unemployment claims come in good. So as far as like the unemployment claims, I do believe that I think having like one good like number isn't going to shake the Fed too much when it comes to lowering the rate. But core retail sales, like these are just showing that businesses are still pretty much running smoothly at this point, which is kind of a good thing because we are at the end of our rate raising. So this kind of indicates that they didn't kill the market too much, they didn't kill the economy too much to where companies aren't like being able to continue to sell their products and profit off of them and whatnot. So I don't think like this positive data here is going to make them change their mind about a September rate cut. I just can't really see that happening because these are mainly right here, the most important, because this is kind of like a snapshot, if you will. But we will find out because clearly FOMC is speaking 3 times in this upcoming week. So we're definitely going to find out where they're at. This is on Friday. Day 2, day 1. Okay. So this is going to be a good release because this is just their meeting minutes. So we're not going to actually have to wait for them to stop talking. They're going to release like the notes from their meeting. So that will probably cause some good volatility on Wednesday, which is when we also usually get a weekly pivot. But this Jackson Hole symposium last year, I just like this is a closed event, and there are obviously like they do release stuff to the public about what they talk about, but clearly there's a lot going on, and it's not like a live feed if I am remembering correctly. I could be wrong about that, but I just remember last year like trading while this was going on. So the meetings are closed to the press, but officials usually talk with reporters throughout the day. Comments and speeches from central bankers and other influential officials can create market volatility. So, like, this is literally where the people who run the world, the central banks, the leaders of the central banks, they're all talking and they're all meeting up, and then they're choosing what they tell the reporters to report. So this is like an event that happens over 3 days. And is extremely volatile. So I just remember last year trying to trade through it, and like literally the markets would just go crazy. I'm pretty sure I got stopped out a handful of times, and I just remember thinking to myself, like, I'm just not going to trade while the event's going on. So I wouldn't recommend trading while this is happening. At least, it's at the end of the week, so you should be able to catch some good moves by Thursday. So Kansas City. Okay, so it looks like Mr. Powell is actually speaking at the symposium. So yeah, this is literally the people who run the world are all meeting up and doing whatever they do in that meeting. We'll just leave it at that. But okay, so let's go ahead and review. Let's first go to the dollar. So the dollar, okay. So the dollar ended up being bearish last week. Like we did get a bearish candle right here. It just didn't play out exactly how we talked about. We kind of talked about price opening. It was like here, and we like a sweep here and then here which it did come into here, and then like it pushes up into, there's an order block right here on the daily time frame, and then it pushes down. But instead it kind of just consolidated here for a couple of days, and then it just started selling off. So I actually took a sell position here, because I remember last week I was like, if it dips into this liquidity, then I'm going to buy it. So I didn't actually end up buying it because of the fundamental news that was coming out. I just felt like the data that was coming out was very bearish. So I just decided not to do that. And I actually ended up taking a sell position because, okay, like, see, price came into liquidity here. It did buy, it just didn't buy all the way up here. So there's a possibility that that could have been profited off of. I mean, just looking here, this is definitely a tradable setup. Price came into this fair value gap after it broke structure to the upside. And this is at 5 in the morning, probably 5:30 on Thursday, which news came out at that time. So this was definitely a buy after this, but it just wasn't the buy that I was like thinking would happen. And I didn't take it myself because I just felt like, I honestly thought this candle was going to be a giant wick off of news and it would sell down. So we are bearish on the dollar for last week, and it looks like we are on our way to create a new low, and heading for this fair value gap. The negative 27 I have marked already because that's how I took my trade. So I would say in the next week, hold on, let me get rid of this fib. So I would say like in the upcoming week, it's probably going to continue down, and to meet the bearish objectives here. So an easy way to do this is to just fib the bearish candle that we got last week. And according to healthy price action, we should be getting a retracement. Okay. It could be to our 50% or some other Fibonacci levels. And then we would get a continuation down. So that would be pretty basic power of 3 way to look at the market. And that trade I took on the dollar, I'm actually still holding it. And I normally don't do that. I like to scalp. So, and I used to day trade. So it's actually pretty interesting that I'm in a swing trade. 5 days, 23rd. Okay. So this option one is what I just uh you know planned out here. Price doesn't necessarily have to take last week's low out. You know what I'm saying? Because if we go to the daily, we do have a bearish order block here that could also push price down and take out the low. Um, I do think it's possible for price to kind of just like, it's obviously going to open here and maybe it doesn't take out that low right here. Um, maybe it just opens lower, but then it just immediately pushes up into that order block, which this order block is also perfectly in alignment with the Fibonacci levels of the weekly candle. And then we get that continuation. So we don't necessarily need to sweep this, you know, but I'm just gonna leave this like that. And then for a bullish week, the only real oopsie. The only real way I see there being a bullish possibility is okay, I see two possibilities. Okay, so if price was to just open higher immediately, tapping into this order block and Fibonacci levels possibly, and then it bounces again, like in this area, but it fails to create a new low here, then we may see price push up either to the 78 to a deeper retracement, or it could go past that and just go to, there was a 2-week order block that I just saw right here, which is part of the larger trend right here. And then we would see in the upcoming weeks after that, then it would continue down. So but I would say right now the momentum is definitely bearish. It looks like upon Sunday's open that we're going to get a down move. Possibly in the first part of the week. We don't have, I mean, yeah, we'll see what happens because we have kind of the heavy news on Monday. So So I think it's possible for this option that we could see price actually sweep, you know what I'm saying? The lows that we're talking about here. I don't know if it'll go as far down as this fair value gap on the weekly time frame, but I do think it's possible to do that as well. So selling. So I'll just add that here for sweeping. So this candle would end as a bullish weekly candle. But like I said, on the daily time frame, it just this bearish, you could technically consider this a bullish order block, but it looks like it's breaking through it. So when Sunday opens, it's going to open as a new candle and there's this order block. So the momentum seems just like really bearish for right now. So like I said, I wouldn't be surprised if this sold to make a new low, finishing this move right here in the beginning part of the week. Even just if it's to sweep just this low and then we push up, you know what I'm saying, into like the higher Fibonacci levels. I don't know why this is crooked, but whatever. Okay. So last week, price. So on both of the indices, um, okay. So last week we did end up bullish. We just like literally every single day was a bullish day. So last week we said that for our bullish scenario, we wanted to see price retrace either into this order block or down here and then start heading up. But like literally price action was bullish from day one. We did have a sweep of Sunday's opening price right here on Monday, and that was it. It was just literally gone in a bullish direction the whole entire week. What I will say though is we talked about there being a 2-day bearish order block, that was our objective for when price turned around and started pushing up. That's exactly where price went, and I thought we might get a break of this high into this imbalance we had marked, which I believe is on the 2-week time frame. Yeah. So this imbalance we had marked, but price did not break that 2-day high. or daily high, whatever you want to call it. So we're still technically in this bearish trend until price breaks this high, which it really looks like it will. Excuse me. So yeah, I think that once we break this high, then price will give us a retracement. But let's just go ahead and take a peek. So like, yeah, so you can see in this instance, let's go to the daily. So once it broke this swing high right here last time, that's when it gave the retracement. But it doesn't give, usually doesn't give that much of a retracement. So if this high gets broken first, like it really does seem like obviously we're going to lower rates within the next month, and it just seems like the market is pricing that in. So to me, it seems like we're about to go on another bull run when it comes to the indexes. So what I usually do is I just look for sell side sweeps instead of retracements, because it doesn't really like to give you deep retracements. So what I mean by that is, like, here's a sell side sweep right here, and then it's bought up, sell side sweep right here, and then it bought, sell side sweep right here, and then it bought, sell side sweep right here, and then it bought, sell side sweep right here, and then it bought. So it looks like right here it's making a double top, so price could come down actually upon open and come fill in these areas. So let's just do a full analysis real quick. Okay, so I could possibly see price opening higher during Sunday open. That would fill in this imbalance here. That would break this high, and it would also tap into there's a 2-week order block. Tap into a 2-week order block as well, right here. And then there's 6 days left of this one. So that would kind of like establish our bullish direction, probably to go and make a new high. And then from there, we would see like a retracement. Probably not a deep retracement like this. It would be amazing if we could get one that deep, but like I said, it's probably time to just start looking for like short-term sell side sweeps. And then so, but just speaking about just speaking strictly about getting a retracement, I mean, let's just put it to the 50%. So like price opens higher on Sunday and we get a sweep of last week's high. We take this high, breaking the downtrend. We fill this imbalance and we tap into a 2-week order block. then price retraces. So that may be enough liquidity for it to actually make a deeper move downward. And then we continue bullish. Our next buy side objective would be the -27 from the fib, as always. There's like a slight imbalance right here as well. And then we also have this next gap on the weekly. I believe that was on the weekly. Yeah, this one right here. So those would be our next bullish objectives. And then of course, price may just go and make a new high. So, but just be careful on that, because I said this last week that like there's been times where I've held for like a new high and then like it hits an order block or something up here and it just sells down. So just take each objective as they come, or move your stop loss up. Either way works. So let me just redo that arrow. Okay. So this would be exactly opposite of what we said the dollar was doing. Let's take a look at the 10-year treasury yield too. So this looks similar to the dollar, obviously. But we want to see this, we want to see price break this low and continue down, because this moves in opposition for the most part to the indices as well. So if we also get a break at this level, that is going to be very good confirmation that NASDAQ will continue to climb higher. NQ, MNQ. Okay.
Lieutenant Colonel Dennis Mitchell is not trusted.
Okay, and that's our bullish weekly candle. Bearish wise, I could see this double top holding up. And then upon Sunday open, we actually would get like a sell. This is also an order block right here. Open lower, and then higher, maybe Monday. No, I don't like that. Don't like that. Maybe we get an open higher, and then a retracement here Monday into this imbalance and order block, and then we get price to come up into here by Tuesday, Wednesday, and then the remainder of the week we actually just end up selling off to ultimately retrace that bearish or excuse me, that bullish weekly candle. And then the following week we would then continue buying. Okay. And then I would just kind of like to put another option out there that is going to be very similar to this last week, because price may just shoot bullish until it makes a new high, and hits this negative 27, and then we'll get a retracement. So just to prepare for that, we would get something very similar to this last week, where we get like a small sweep of Sunday's opening price right here. And then we're just bullish all week, but we do have sell side liquidity sweeps. So we'd get like a consolidation Sunday, and then we just start trending. Most of these pullbacks, if you will, are going to happen in late London or New York session. And it usually is in the form of a sweep to stop people out and then just continue higher. Okay, that looks good. Wait. Okay, no, we're in the third week. I was tripping because I see 4 of these. Okay, so Dow Jones last week was pretty similar. The only thing, I mean, it's basically identical. I honestly feel like this went, did even better than NASDAQ did. But it's the same thing. Like we had Sunday open here. We actually got a deeper sell. And price kind of actually like consolidated here. What day is this? Tuesday. So we had a sweep on Monday, and then we had a sweep on Tuesday, probably on a news release, and price just went up the whole entire week. So we didn't really see price come into this imbalance or tap into this order block, let alone even sweep anything else other than its own consolidation. And then it just smashed through our next bullish objective that we had set, which I believe I'm trying to figure out what we put that box there for. Huh. Okay, so I don't know what this box was there for. But we did break our 4-hour trend, or our 4-hour high, excuse me. So that's what we kind of talked about last week. I said at the beginning of the week I wouldn't be surprised if price, like beginning as in like Sunday, Monday, price immediately broke this high so that it would come and retrace and then we would start pushing up. But upon open, we didn't do that. We didn't actually break that high until Tuesday, and then price obviously pushed down after that happened, but it didn't give like a full retracement. It just gave a sell side sweep the following New York session. Very similar to NASDAQ. So weekly wise, this is technically a bullish order block as well. I usually like to see a candle of the opposite color right next to the recent impulsive candle. So this one technically wouldn't be my favorite type of order block, but we'll just go with it. Because what we're going to do anyway is we're going to fib this. Okay. Yes, I do see this bearish weekly order block right here. And I think there's also a 2-week one. There's also a 2-week one. So I mentioned last week that this could possibly get blown through because there's one right here. You can see it got blown through. We do have 6 days left of this current 2-week candle. So who knows, it might end up looking like this one. So in the first week of this 2-week candle, obviously price had come up here at some point and then it ended up pushing back down because of the reaction of this order block, but ultimately it did break through. So we could potentially see something like that happen again this week, which for me, that would look something like this into the retracement, and then we would have a long wick here, right? and then the body would close down here somewhere. So that would end up being a bearish day, or a bearish week, excuse me. So that's funny. There is actually an order block right here. Or let's look at the weekly again. Or we could just get what we said for similar to the NASDAQ. We get a sweep of last week's high, then we get a retracement of this candle right here, and then price ultimately goes up higher. Okay. I do see this order block that we are in right now. So we definitely should get some sort of reaction to that as well. So for this one, this would be like Monday, Tuesday, Wednesday, and then this would finish the week off. This one would be like Monday, Tuesday, Wednesday, finish the week off. So pretty simple. I doubt price is going to come back down here at this point in time. So we can probably go ahead and delete all that. There is an imbalance right where the golden zone is. There's imbalance here, close to this, the 78. There's an order block at the 78. Okay. So this is assuming that price is going to give us healthy price action. Because I don't consider price moving bullish every day to be healthy price action. It needs to retrace at some point in time. It's just a question of when it will do that. But in order for price to continue being healthy, it does need to create structure that can support the weight of it continually going up, like stairs. Also, since we did get this break of structure right here, this is pretty obvious. So this is like a chalk. Right, chalk. Typically, we want to see after we break structure, we want to see retracement. So that's kind of just confirming what we already know. Realistically speaking, for this chalk, the uptrend, the impulse move that broke this high technically started down here or down here. So for this price leg, we would want to see retracement levels in here, but I think we're just going to stay modest for right now because we just want the closest objectives first. But do keep that in mind. If price does come deeper down, don't freak out and be like, oh my gosh, it's turning around, because it's probably not. It's just going and making a deep retracement. And then of course, we could see, something like last week where we are just out of here. We don't get very much of a retracement. Um, Maybe price manipulates for a little bit and then we're just up and out of here. So, but like just bringing it back to the Jackson Hole Symposium, like, guys, these are literally the people that run the world. They run the currencies, they run the banks, they basically run all the governments, in my opinion. So anything that these people say, like, they control the markets, so they can literally say one thing and tell the market where to go. Or what my opinion is, they can pull out their phone and put in a couple of orders and move the market that way, and then they release a statement saying like whatever the statement says to cover up, that movement. But that's a topic for another time. So, all right, this looks good. Okay. All right, guys, that looks good. So yeah, that's the analysis for this upcoming next week. If I have any words of advice to you, it would be not to trade during the Jackson Hole Symposium. Um, like I said, it's a closed event and you just never know what they're gonna do. These people actually control the market. So they can literally say whatever and do whatever they want to do. So you have literally 3 days before that to capitalize on the market movements with some decently volatile news events. So just be patient. And yeah, just read the market correctly, have good self-control, and definitely by prayer, lead your day, lead your trading day. So yeah, so if you like this analysis, I do this every Saturday for the group Regnum Exchange. We have a Discord. If you're watching on YouTube, you're more than welcome to join the Discord. And I put the link to these Zoom calls in like Discord chat if you want to hop on here live and ask me questions. Other than that, if this video provided value to you in any way, go ahead and like, subscribe, share the video, leave a comment. That would be very helpful to grow the channel, and to ultimately, spread the word of God in the Forex industry. So thank you so much for watching, and I hope that you have a blessed trading week.